Okay, so today we're going to look at extending the trial balance and adjustments to balance sheets. So these are exam questions that often deal with income statements and balance sheets and additional information. So the accounts will have been completed up to trial balance, but then there's some items that have not yet been put into the books. So we have to do the double entry, which will affect the trial balance or the ledger balances, depending on what we're given. And that will in turn affect the outcome of the income statement or the statement of financial position. So I'll give you a little example. There you go, you've got a trial balance. You can see it balances. So everything looks like it's correct, but there are these errors of omission. There's 3 items that have yet to be entered into the books. Now, if we were to complete the double entry for each of those items, then that would affect the trial balance. Now, we can do an income statement based off the trial balance as given, but it won't be complete. So what we've got to do is make sure that we include those in the trial balance. So there is a few steps in order to do this. It's relatively straightforward, relatively easy. The example that I've given isn't a proper exam question because you simply can't fit it on a PowerPoint slide. But the steps that we're going to go through are exactly the same. So we'll take you through one by one. So the first step is using the additional information, open up accounts for each of the items, enter in the brought down as given in the trial balance. So you don't need to open T accounts for everything in the trial balance, but you will need to enter those items that are going to be affected by the additional information. And you should also draw up additional T accounts to complete the double entry. Now, despite me saying that you don't need to open up accounts for everything, on this example, I have just so you can see. So I've opened up each of the 5 items that were found in the trial balance, and then I've got some extra accounts because I know what's coming. So put in the brought down as it appears in the trial balance because you're going to affect that number by doing the additional information. The step 2 is to complete the double entry for each item. So the first one was wages remained unpaid at the end of the year for £100. So that is an accrual. So we're going to debit the wages and we're going to credit the accrual account. Next one, rent has been paid for 15 months to the 31st of March 2017. I know my dates are old, but it's a good example. So where there is 15 months, obviously our financial years are only 12 months. So we've paid £300 too much. If the total rent was £1,500, divide that by 15, times it by 3 for the extra months. And we've got a prepayment of £300. So we will credit our rent account. We will debit our prepayment account. Then vehicles are depreciated at 10% of cost. Now, there was no depreciation in our original trial balance, so we're going to create a couple of accounts. We're going to create a depreciation expense and we're going to create a provision for depreciation. You don't have to use a depreciation expense. You can do it directly to the profit and loss, but just for the sake of ease, we're doing it to a depreciation account. Now, our original vehicle cost £10,000, so 10% of that is £1,000. So we will debit the expense and credit the provision. Then what we're going to do is we're going to balance all the accounts. So all those accounts that we've affected, I've balanced off, and you can see that on the screen there. I've balanced them all off. Just take note in particular of the wages and the rent. You've obviously got a transfer figure and a brought down. And remember that it's the transfer figure that's used in the trial balance because the brought down is just a notification of an accrual or a prepayment. So there you go. We've got each of the accounts balanced off with the new figures added. And that's changed the amounts for each of them. Remember that rent originally was £1,500. Once we've added in that prepayment or deducted the prepayment, then we've got a transfer figure of £1,200. So we've done the double entry and then we've balanced off each of the accounts. That will then take us to the trial balance again. We're going to have to redo the trial balance. So using the brought down figures or the transfer figures from our balances, we can create a new trial balance, something by now you should be able to do. Now, in an exam setting, you probably won't have time to completely redraw the trial balance, but you can cross numbers out and add numbers to the trial balance. The only reason I've shown you it as a redrawn trial balance here is just to show you the effect of the double entry. It has still made the trial balance. So by ensuring that I do double entry, I can make sure that my trial balance still balances. Okay. Once you've done that, all you've got to do is the profit and loss and balance sheet. So if you're given a question where you're given a list of balances and some additional information, do the double entry, making sure you affect two accounts that appear in the trial balance. And if one of the accounts doesn't appear in the trial balance, you need to add it to it. All right. Once you've done that, easy enough to do your profit and loss and balance sheet from there. Now, the next item that we see is changing the profit on the balance sheet. Normally, we expect to do an income statement and then a balance sheet, taking the profit from the income statement to the balance sheet. The AQA and the other exam boards, they like to test your knowledge of the income statement by giving you a balance sheet with profit on, where you may have to affect that profit figure. The important thing to remember is that any double entry that affects the income statement account will have an effect on profit. So here is an example. I've got a balance sheet. This one balances. Sometimes in the exam, they don't balance. Things will be in the wrong place. That's a different style of question. This one, though, we've got a balance sheet that does balance, £22,000 net assets balancing with our capital section. But again, we've got three pieces of additional information. Those three pieces of additional information must be entered into the accounts in order to show a true and fair view. So step one, using the additional information, again, open up accounts for each of the three items, enter in the brought downs if you know them. You should also draw up additional T accounts for the double entry once again. You should also draw up a profit and loss account. That's a T account for profit and loss. It's where we send our transfer figures. So we're going to complete the double entry. So for each of the items, for the doubtful debts, I've credited the doubtful debts. I would debit the profit and loss. Provision for depreciation, there's £2,000 worth of depreciation. So credit the provision, debit the depreciation expense. And then for the accrual, add to the wages, credit the accrual. One thing to notice there is I put the brought down of 7,000, which was the original profit on the balance sheet. I put that as a brought down in the profit and loss on the credit. So we're then going to balance off each of the accounts. So remember to identify which accounts go on the balance sheet and which go on the income statement, and therefore must be transferred and will affect the profit. So doing that double entry then, balancing them all off. You can see I've now balanced them off from the previous slide where I just entered the information. At the end, I'll balance them all off. So provision for doubtful debts brought down at 350. Provision for depreciation brought down at 2,000. The depreciation expense gets transferred. So it credits the depreciation to transfer it out, and it'll debit the profit and loss. In the accrual account, we bring that down because that appears on the balance sheet. And the wages gets transferred. That extra £400 would also need to be transferred. Each of those transfer items appears on the opposite side in the profit and loss. So the provision for doubtful debts, the 350 debits the profit and loss, the depreciation transfers from the credit of the expense to the debit, the profit and loss. Same with the wages, transfers from the credit onto the debit side. All we need to do then is balance off our profit and loss account, and that will tell us our new profit figure for the balance sheet. So rather than having to do a full income statement, we can use the profit and loss account to calculate the value of our new profit. Once we've done all that, we simply redraw the balance sheet, entering in all those accounts that didn't affect profit and would go on the balance sheet. So our provision for depreciation now appears in the non-current assets section, taking us down to £18,000 net book value for machinery. The provision for doubtful debts, the full amount of the provision reduces the debtors in the balance sheet to give us our net debtor. In the current liabilities, we can then see the accrual of £400. Now, each of those items has affected the net assets, so it's reduced the net assets down to 19,250. And as profit is reduced down to 4,250, our equity section will also balance. So there you go. I hope that is useful.